Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, back with our annual Singapore Fintech Festival coverage. Organized by the Monetary Authority of Singapore, the Singapore Fintech Fest is on its 6th edition, and we're proud to be a media partner for the 4th year in a row. Joining me for this segment is Sergey Nazarov, co-founder of Chainlink, to discuss institutional adoption of DeFi. Sergey, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me. Great to be here.
All right, thank you. And remind us about Chainlink and the solutions that you provide.
Sure. So Chainlink enables hybrid smart contracts, which are the more advanced form of smart contracts, such as DeFi, dynamic NFTs, and various other more advanced versions of smart contracts. What Chainlink does is create an infrastructure called Oracle networks, which provide all of the decentralized services and more advanced capabilities that smart contracts need to become basically a hybrid version, such as DeFi, which is a combination of a blockchain and Oracle networks in the form of what we provide at Chainlink. So Chainlink basically enables these more advanced smart contracts that are called DeFi, dynamic NFTs, and all of those kinds of use cases.
And Sergey, what's driving the growth of cryptocurrency and DeFi adoption?
I think there's two primary factors. The first factor is inflation. Inflation is something that's going to continue to be an issue and a top of mind subject for a lot of both retail and institutional people, and it's going to continue to grow in importance. Generally speaking, I think cryptocurrencies are more and more viewed as an inflation hedge, and I think in many cases that is accurate. And so what's going to be happening, and what's already happening, is that people are getting this digital inflation hedge in the form of cryptocurrencies into their portfolio, which is exactly what we kind of said would be happening in the past conversations we've had. Beyond that, DeFi is the use of cryptocurrencies in financial products, and DeFi is actually able to provide a rate of return of anywhere from 2 to 8%. So that's a very attractive rate of return when banks provide sub 1% rates of return on capital that you store in banks. So not only do you get a digital inflation hedge when you get cryptocurrency, but then you can put it into these DeFi financial products and get anywhere from 2 to 8%. Which is a superior rate of return in a more transparent, less risky way. So the benefits of getting into cryptocurrency have really never been larger, and the benefits and returns from DeFi are just accelerating the entire dynamic because people can not only protect themselves from inflation but get a very large return.
How did Chainlink go from securing $7 billion last year to over $75 billion in less than a year?
So we're known by many people as being pivotal into the emergence and growth of DeFi. And so we've launched hundreds of different decentralized services and hundreds of Oracle networks that basically power the top DeFi protocols in lending and in derivatives and various other sectors of DeFi. So as DeFi has grown, so has the value we secure. Generally speaking, Chainlink has also started to secure value in various other verticals, such as gaming, dynamic NFTs, decentralized insurance, and others. So it's both a combination of our ability to help DeFi grow into what it is today and for it to continue to grow and secure more and more value, and the ability for Chainlink to expand into all of these other verticals, such as gaming, NFTs, and insurance, and many others. So those are the two kind of combined forces, which at this point are only accelerating.
And Sergey, to wrap up here, what is next for DeFi growth?
So I think the inflation hedge will continue to be a big reason why people acquire cryptocurrency, and then it's going to become continually easier and easier to put those into DeFi. I think this will drive a lot of demand from consumers for their banks and their fintechs and their web companies to give them access to not only cryptocurrency, but also DeFi. So I expect banks and existing solutions and existing kind of applications that people use to be providing access to both cryptocurrency and DeFi. And then I also expect the emergence of something called cross-chain smart contracts, which are smart contracts that actually are built across many different chains at the same time. And that's going to be enabled through something called CCIP, the cross-chain interoperability protocol, that will enable more advanced smart contracts even beyond what they can do now, right? So I expect the macro thesis to continue to drive people into crypto and DeFi. I expect institutions, web companies, and fintechs to have more and more pressure from consumers that they're going to seek to meet, and they will meet, by providing them access to cryptocurrency and DeFi. And I expect more and more advanced architectures and smart contracts to come into existence through the use of Oracle networks together with blockchains and exciting new protocols like CCIP for the creation of what we call cross-chain smart contracts.
All right, Sergey, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me.